Hey traders, TG Watkins here. We actually had some really good trades come through and some good guidance from me to the subscribers about the recent market turns. So I wanted to take a minute and actually highlight some of this about what the trading room actually looks like. Now, if you guys aren't in the trading room, or if you have been looking at this and wondering and seeing my newsletters and any videos I put out, remember we're always doing a $7 trial for 30 days. That way you guys can come in and check it out and see what it's like. So you just have to come over to simplertrading.com/Moxie. So what I want to show you in through here, let me get the right cursor color, is this was the 25th. So that was yesterday that I wanted to show you guys. And what in through here I was talking about is that the SPY continues to flag under the hourly 50, and we had the 15-minute 50 below the 200, and the Moxies are not strong. So I was talking about bearishness and the market looking down, all this stuff. Now, mind you, this was also just before the market opened, and the market was kind of gapping down a bit. I related this to a GDX example, which I'll get to you guys in just a second. And, I was like, hey, I think we're at least looking for price to go down. This is bearish. We'll see what it's going to happen. And then you can see just after 4 minutes after the market opened, and I was able to see what the internals, I posted and I said, hey, internals are fairly strong to the downside. I said maybe today can break down out of its range after some morning consolidation from the gap down, and basically mentioning that the volume and the advanced decline, all that was muted over the last few days, meaning, hey, this is very, very weak. But you can see that right here, if you look at the upper left-hand corner, -5 to 1. That's significant. That's a pretty healthy downdraft as far as moves. And you can see right here on the bottom left, the advanced decline was all the way at the bottom. That usually means a trending day if it's to the downside or if it's at the lows. And that's exactly what we got. And then I came in down here a little bit further at 7:12. Now, mind you, I'm on Pacific time. So, 4 minutes after the market opened, and then 45 minutes after the market opened. And I said, yep, the internals are right about this morning weakness, and apparently the morning consolidation meant the 2-minute 8 EMA. And so if you look here, and again, this is everything I'm posting to the Moxie traders and the subscribers in the room, you can see I commented right there that we got that little bit morning consolidation, price flagged sideways into the 2-minute 8 EMA, and then it was just down all day after that. So good guidance, pretty strong. And by the late morning, towards the end of the day, we cashed in one of our positions. It was a leverage inverse ETF of the FANG stocks called FNGD. We got a nice healthy 12% on that one. And then also what I was saying is, I said we could see a bounce or a flag here, so I want to cash in the trade because we have Microsoft and Google earnings. Now, let's take a look at what happened from there. So if we go FNGD, we took this trade, it's a small little trade, but we got in there and we exited there. And thank goodness, because what happened? When Microsoft came out with its earnings, which were up, FNGD went down. So remember, inverse ETF. So this was a great thing that we got out of this thing and captured it just before those earnings. And now that we have Meta up, this thing is probably not working even more. Let me see if we can look at the overnight. Yeah, you can see it's even down even further. So it was a perfect exit of what we did in through there. Now, let me show you GDX that I was referencing to, because this is how the Moxie Indicator works, and this is why we have, everybody subscribes to it because they like it. You can see right in through here how price kind of bounced up over the 15-minute 50, but notice that the Moxie Indicator was not looking strong. It spread from each other. It was below zero. Like, nothing said that this was going to have any strength whatsoever. And so when you see a move like that, it's basically a false move. It's a false long. It's a bounce and a downtrend. And this is a good place to short it. And you can see that since then, GDX has been working its way down, at least to the daily 21. And if we take that and we relate it to the SPY, and I'd been targeting for price to at least go to the daily 21, it went further, so that's fine. We were on the right side. But look what happened here. This is the kind of stuff that I was calling out in the trading room, said, hey, these were inverse trampoline moves on the 15-minute time frame. Price should not be over the 15-minute 50 if the Moxie Indicator is below zero. And you guys can see how that looked exactly like GDX. So for the last week, I was teaching and coaching the Moxie subscribers and traders about what I was seeing on GDX and taking that and relating it to the S&P. And so then we were able to be positioned to take shorts on this, to go long on inverse ETFs, to look at the UVXY, all that kind of stuff. And this is the kind of information and solid guidance that I provide to any of the subscribers out there. All right, traders, TG here. It is now April 27th, so this is a day later from the first portion of that video that you saw, so I wanted to follow up with some of the activity that was happening in the room here. And the thing we were talking about, so this morning, you can see here just before the market opened, we were talking about the patterns and the reason why we went long yesterday. And I said right here, I said, I think the easy target is the SPY hourly 50 SMA, but if there's a lot of energy, it could go just a little bit past it. And then beware, I think this move is heading up into resistance. And so this would be the next logical area for us to short and for the market to move down. Yeah, talk about earnings and all that kind of stuff. And then, you know, looking at the VIX, you guys know I talk about the 50-250 maneuver. And the VIX did that yesterday, which is why I went long yesterday. So today was great. Today was a great day to the upside. And so yeah, that's what went through here. So this is what we were trying to do and catching up with that. Now the interesting thing, so I went through, I took about 3 or 4 different trades on the long side, SOXL. Didn't work out in the morning, so I was like, huh, that's weird. So we just cut it. But it did end up moving up a little bit today, but it's still, you know, very, very weak. But yeah, that was an interesting one. That's why I like to kind of spread my trades around as far as the indexes, because you never quite know which one they're going to do. And then when we're coming in here through here, these are the kind of communications that I have to the subscribers and saying, hey, you know, we should be seeing this or that happen. And, you know, for example, the IWM this morning did a double bottom as an elf shoe on the 15-minute time frame. And I said, you know, we should be seeing this kind of move up and all that kind of stuff. And, you know, but intervals are positive. Okay. And that was 8:45. And then at 9:27, remember, I'm on Pacific time, started to say, oh, yeah, we're starting to make some progress. You know, here's this. This is what it looked like. And this morning was a 5-minute trampoline setup. So even if you're a day trader, I communicate to you guys to tell you how the Moxie indicator is working, how to look for that, and what's been going on there. So again, that's what we have right here. Let me show you what that looked like. You could see here, price was below the 50. The Moxie indicator was above 0. That was your trampoline move. And then you can see there's your double bottom, and that was the elf shoe on the 15-minute time frame of the IWM. So talking about that. And then today was a huge move for the markets, and took some half position off on the way up, and then we just exited at near the end of the day and said, you know, this was a heck of a short squeeze. So, you know, fair. That's great. We're having a great time with it, and you know, we'll see where that's going to go. All right, so that is the stuff that we did, and then we started going into the UVIX, and we'll have to see how that works out. But if we look today, you know, this was a heck of a move, man. You know, this market is kind of all over the place, and this goes along with my whole first move, second move thing. This is why I was looking at buying in through here yesterday, the 26th, and it was a perfect buy. This was been worked out very, very nicely. You can see on the hourly chart, where did price go? You know, I was targeting at least the hourly 50, and I said, hey, if this has a lot of momentum, it could go up over the hourly 50. Well, lo and behold, it got there in one day. I was kind of expecting this to take 2, maybe 3 days, and it did it in one day. So that was fantastic. You could just see that price up here just went all day long on this. And the other interesting thing is it did go from the lower 30 ATR to the upper 30 ATR, which is quite a bit. That is a big move. So yeah, we had a good time with that one. And then if you notice the NASDAQ, of course, it was screaming like an eagle. And that was mostly because of Meta and all that kind of stuff. So we had Microsoft up, you know, Meta up. Google even started catching a bid. Amazon caught a bid. In fact, Amazon had earnings today, and it's up too. So I guess we'll have to see what NVIDIA and Apple are going to do when they report earnings. But I am just a little bit cautious about this. You know, the markets are up and they're doing their thing, but it just seems odd. Okay, it seems a little bit odd. We know that breadth is not doing well. There are only a handful of stocks that are pulling the market up. And gosh, this was just such a screamer. It really kind of looks like a short squeeze. And part of the reason is just because of how this thing was moving. It was running all day long. And actually it wasn't even running, it was like grinding all day long and just would not stop, which was fine with us because we were long. We got in long for this trade perfectly. And you could just see that this thing was moving so much. Look at that gap between price and the 8 EMA. And then you could even see that price came up here to the 3rd ATR, and we're back up here to previous highs. So, if this is going to continue to the upside, that's a big if. I don't want to be adding or chasing a position here. I got to wait for a pullback. And so we're going to have to see somehow when this thing pulls back, if it does something like that, and then if it's going to hold. Because if it doesn't hold, then we could see price come down like this, tinker around a little bit, and then continue down like that. So that's generally what we're looking for and watching out for. But wow, what a wild move today. I'm so glad we were on the right side of it, and all that worked out very, very nicely. And in fact, you could see that the NASDAQ basically even did a double bottom, going into that. And that's what launched it right there. There was your double bottom. So yeah, nice moves on these things. IWM, if we look at this, the part of the reason why we were trading this one is, kind of the same thing as all the rest, is that they were oversold. They were very, very stretched. And you could see the IWM down here along its lower 3rd ATR. And, at the time, there was a big gap between price and the 8 EMA. And so it was likely to move back up. Now, if you guys recognize the elf shoe pattern, you can see here that price is at the arch of the foot. So, according, like I posted in the charts, according to the elf shoe pattern, we should be running into some resistance here, and we should at least expect a pullback. Now, if that pullback is into support and goes higher, well, then that would complete the double bottom elf shoe type situation, and it would make sense. But since since this market is very weird and treacherous, we decided we got in here and we got out here in expectation that price might actually come down here, say tomorrow or something, or the next day, who knows. And then if it holds, then we can go up. But if it doesn't hold, it could just fail and keep going lower. That's why we wanted to take our position today. And you can see here, there was the double bottom on the IWM 15-minute that I had been talking about. So a lot of really good stuff over this week in the markets and whatnot. So pretty wild. If we look at, I always say, and I need to reiterate, that earnings don't care about your technical analysis. Now, sometimes it works out nicely. If I show you something like, I think Tesla went down, and the Moxie Indicator and all the technical analysis stuff was saying it should go down, and so it did. But then we had, Meta went up, and we had, I think, Microsoft go up, and they did it basically in downtrends or pullbacks, and then they shot up. And so the Moxie Indicator is very far below zero on the hourly chart, and it just shot up. So this is why I don't trade earnings. I'm not an options trader, so I can't really take advantage of moves. And heck, this thing seems like it was a bigger move than probably the market makers were expecting. So I just don't play earnings. And that's why, and I don't do that because a lot of the times, the technical analysis of your indicators and the charts and whatever, it doesn't matter. It doesn't matter because it's an earnings report. There's going to be a big thing of news that comes out, and it's going to make the charts do whatever they're going to do. And so sometimes it works. Sometimes your technical analysis and the earnings move make a lot of sense, and they go with it. Other times they don't. So that's kind of what we're looking at through here. So big moves. Amazon's up again, and we're just going to have to kind of see how this week is going to settle up and where it's going to go. But just be a little bit cautious. These things are awfully frothy. And if you look at just even Meta, what happens when they get this high? They do eventually pull back. Okay, so just be careful that it is up here. It could keep going a little bit, but I'd be careful that at some point it's gonna pull back. It's gonna want to come back down to its moving average support. So yeah, I'm not entirely believing this, especially since I wasn't in on it. So it's up there very high, and just be careful. All right, everyone. Thanks again. See you soon.